Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. As you heard, my name is Jerry Robinson. I'm an economist, founder here at followthemoney.com, trend trader, trend trading coach. Been investing in real estate, stocks, cryptocurrencies for many years, and we love to do this podcast for our global audience. We have listeners all over the place. We've been doing this podcast since 2010, so it's been around for, 13 years now, and it sure has been an honor and a privilege to be able to do this podcast. And we've met so many people over the years through this podcast. It's such a great thing we always look forward to. So thanks again for tuning in to today's podcast episode. Today's episode, as you can see, episode number 439, entitled Market Watch. What I want to do today is I want to spend a little bit of time going over what's been happening in the markets, not just the stock market, but also the crypto markets as well. There's been a lot of late news happening. Of course, a lot of late breaking news even over the last couple of days with the SEC and Binance and Coinbase. We've had Apple release its Vision Pro headset. We have seen commodity prices under pressure. There's just been a lot going on. But let's just begin. I want to begin, first of all, by just letting you know that, many of you know, I'm sure many of you who are listening are members here at followthemoney.com. We have a robust premium membership where we teach people how to trade better, how to invest better. We have a trend trading software that we've created, a trend trading system that elicits, uptrend alerts and downtrend alerts. We just issued one of the most major alerts that our system generates, and that's a long-term uptrend. But we issued that long-term uptrend signal on the S&P 500 index. Now, the S&P, as many of you know, is a very important index here in the United States for tracking the United States stock market. It is, in fact, I think probably the global proxy for the United States stock market, much more so than the Dow Jones, which is just composed of 30 stocks, or even the NASDAQ, which is really tech heavy. The S&P 500 is a good aggregation of many different U.S. stocks from various sectors. In fact, it's composed from the 11 sectors of the stock market. And so whenever it does something, it's meaningful. And we like to watch the S&P 500 for that reason. Studies have shown that 3 out of 4 stocks will follow the general trend of the S&P 500. And so how that one trades, how that index trades is very important. Well, anyway, we just issued a long-term uptrend signal to all of our members on the S&P 500. This long-term uptrend signal detected by our trading system came after 2 major things happened. Number one, we saw a confirmed debt ceiling deal. Now, if you listened to our last podcast, we talked about the debt ceiling drama, and we just poked a little fun at how Washington tends to handle this debt ceiling deal. It's not really funny, quite frankly, because they're messing with people's livelihoods. They're messing with the overall economy for political gain. But as we pointed out in that podcast episode, we said, look, the debt ceiling deal is going to happen. They're not going to let the thing, expire and then suddenly have, a default. But that's how the media was playing it. What if, the United States decides to stop borrowing money to pay its bills? I mean, as if anybody believes that for a second. I mean, Washington knows how to borrow money, and that's what they're good at. And that's what they're going to continue to do until they can't do it anymore, until people won't lend the money. So Washington will continue to kick the can down the road and borrow money to pay its bills until it can't. I mean, that's just the whole point, So the debt ceiling drama was all just that. It was just drama. And we knew we were going to get a last-minute deal, and it really was last minute. I mean, it was all the way up to the very last minute they finally passed it. And it was a big bipartisan bill that was passed, right? So it wasn't like, it was just half of the body of Washington. most politicians were signing on to it. So anyway, the debt ceiling deal happened. And then another thing, for those of you who are kind of into technical analysis, you like to watch charts like we do. On the S&P 500 chart, if you look at that chart, you'll see that there's some really key resistance at 42.75. That level we have been talking about to our members now for a while. We got a nice breakout above that level, which coincided with that brand new long-term uptrend signal that we issued to our members on the S&P 500. So what does that mean? If the S&P 500 flashes a new long-term uptrend signal, what does that mean? Well, it means that, quite frankly, it means that we are now in a new confirmed bull market, right? So we track a few different trends for every market. We track the long-term trend, which is obviously a major trend. We also track the position trend. That's good for position traders, intermediate time frame traders. And then we track the swing trend. And the swing trend is really good for short-term traders, swing traders, things like that. So a swing trend is not nearly as powerful as a position trend, and the position trend is not nearly as powerful as the long-term trend. The long-term trend is the big daddy. I mean, it's the big one. So when that flashes, when we get a long-term uptrend signal on the stock market, on the S&P 500, for example, that's meaningful. That's really meaningful. Now, we already had a long-term uptrend signal on the NASDAQ, and we had alerted our members to that a while back. They've been able to enjoy, good gains in the market since that time. But now we have this S&P 500 doing the same thing. So it's finally confirmed a new long-term uptrend. And what's interesting is when you look at this current, at this bear market that we've had in the stock market here in the United States, it's been brutal. I mean, 2022, as I've said, it's difficult for me to think of a more difficult year or a problematic year for investors and traders than, 2022. I mean, it was good for traders in some respect because they were able to trade in that wild environment. But overall, though, it was a very, very crushing experience for those who are investors, who have large positions. You were just seeing the market go down and down and down all throughout 2022. Very tough year. Well, 2023 has certainly turned around. We've seen the markets really rally. And when you look at what's happened, the sectors that were beaten down the most in 2022, things like technology, communication services, consumer discretionary, these are the areas in 2023 that are excelling, that are rising the most. In fact, if you take away tech, consumer discretionary, and communications from the S&P, there's 11 sectors. If you take away those three sectors, I mean, you have pretty much a flat market, if not a down market. So we've really seen, the losers from 2022 recoup a lot of their losses in 2023, some of them completely recouping them all so far, and we're only halfway through the year, But then you also have, the best performing sector in 2022, which was energy. Now in 2023, it's the worst performing sector. So it's been a reversal of fortunes. It's been kind of a strange moment here where we've all gone through this, as I've been calling it, just like a meat grinder. I mean, the economy's been through a meat grinder. We had all of this crazy stuff with COVID. We had shutdowns, lockdowns. We had people afraid to, go back out of their homes for a period of time. We had people working from home. We had the Zoom phenomenon. Then we had, of course, the market that just took off because of all of the excessive money printing that went on. I mean, there's going to be, the smart people will write the books later on and explain what we just lived through. And what we just lived through was, manic money printing that sent the market soaring in 2021. And then the Fed had to tighten the reins and it had to bring the money supply back down. And as it did, by cutting rates, it just really just took all the froth back out of the market. So it's been really wild for those who have been investing in this environment. So the S&P 500 confirming that new long-term uptrend signal. And when that happens, it basically means that the wind is at your back as an investor when it comes to the stock market. Now, I want you to know that when you first get a confirmed long-term uptrend signal like we have issued here, historically, when we look back, we say, well, it's not all, rainbows and giggles. I mean, whenever you are looking at, something like this, it's going to take a little bit of time for the market to work itself out. And the market doesn't go straight up because we've called a new long-term uptrend signal. But you'll see that the wind will be more at your back than at your face, is one way to put it when it comes to the stock market. We still expect volatility. We still expect an earnings recession, maybe even later this year, maybe even Q2, Q3 earnings. But, overall, we feel like the majority of the pain is behind us based upon everything that we've seen, all the data that we have. That's what we're seeing. So that's good news. Now, also the Russell 2000, which is small caps, that's one thing to keep your eye on. We've been talking to our members about the small cap space for quite a bit of time, saying this year we could really see Russell 2000 do well. Well, it's also recently just broken out above its 200-day moving average, which from a technical perspective is a pretty big deal. So we'll be watching the Russell 2000 small caps. Those could really do well as we move into the remainder of the year. We have our eyes certainly on that. But what's interesting is that right now, despite all of that, if you look at the number of people, the amount of money that is short this market, specifically the S&P 500, you'll see that you have to go back to 2007 to find more people who are more money that is short this market. You have to go all the way back to 2007. So there's a lot of fear still in the market, despite the fact that we've issued this uptrend signal, despite the fact that a lot of technical things have happened on the charts that are bullish. And despite the fact that we have many stocks that have really gone up well in 2023, you still have a tremendous amount of fear. Now, this is normal. This is what happened back in 2008. So after the market crashed in 2008, we called a new uptrend signal in 2009. It was in the middle of 2009. And we said, well, there's a new long-term uptrend signal. And people said, well, who cares? Because we just went through this crazy sell-off. And it can't certainly be going back up now, right? A lot of people are like, well, so what? Well, then 2010 came around and the market had gone up and it was still in a long-term uptrend. And it stayed in a long-term uptrend for quite a long time. In fact, that 2010 to 2020 was one of the biggest rallies in anybody's lifetime. I mean, it was incredible. Well, we were calling that uptrend back in 2009. We were in the middle of it. But the point is that many people were still caught in that moment, stuck in that moment, and they couldn't imagine that stocks could go back up because they had gone down so bad. And that's what happened in 2022. A lot of people, many people were new to investing, new traders. We saw a lot of people flood in 2020 and 2021 because of all the money printing. And it was, becoming easy, it seemed, to be able to make money trading and investing. And so people just started hopping into the market. Many of them had no experience whatsoever. Many people just started, you could read about it in the Wall Street Journal or in Money Magazine. They were just talking about how people were just jumping into the market, Well, then 2022 came along and just walloped all of these new investors and new traders. And many of them got burnt. And they don't understand the cycles. They don't understand the trends. Many of them don't understand that. And so now they're like, well, the market has to keep going down because it went down. Right? Kind of stuck in that moment. But that's what happens. The market goes down and the market goes up. And the market goes down and the market goes up, right? So what we do is we don't fight that. We just simply follow the money here at followthemoney.com. We simply follow the trend. We pay attention to what's happening in the trends and we alert our members. And that has worked very well for us over the years and for our members as well. So anyway, net shorts are at the highest level we've seen since 2007, and many short sellers have been crushed this year because they thought 2022 was going to continue into 2023. So for example, I'm looking at some of the latest stats here on short seller losses. For example, some of the semiconductor names like Broadcom, ticker symbol AVGO, it's had a year-to-date gain of about 42% this year. The short sellers have lost $1.5 billion trying to short this company in 2023, thinking that 2023 would be a repeat of 2022, right? Because it went down in 2022, well, it has to keep going down. Or how about Advanced Micro Devices, another semiconductor stock, AMD ticker? It's up 83% this year. And short sellers lost $2 billion on that stock just this year. Okay. So short sellers are ones who say, I'm betting that the stock is going to go down. And when the stock goes up 83%, in the matter of 6 months, that tends to hurt your short selling position. So, short sellers lost $2 billion on AMD so far this year. How about NVIDIA? NVIDIA, just one for the record books. It's up a blistering 167% or so this year. NVIDIA is a long-term position that we own in our own long-term portfolio, and we were telling our members about it all throughout 2022. We were dollar cost averaging in on the big sell-off. It's worked out very well for us and for our members in 2023 with the, as I mentioned, the stock up, 167%, just soaring off of its lows, reached, late last year. But short sellers who thought that NVIDIA was, the story of NVIDIA was over, the short sellers have lost $8.6 billion in 2023 on NVIDIA. $8.6 billion. That's how much they've lost shorting, trying to make money shorting NVIDIA, which has gone up, like I said, 167%. So, trying to time the markets without any kind of trend analysis is bad news. And that's what happens a lot of times is people will get stuck in a moment. They'll be emotional. They'll think, well, this has to continue, and they'll ignore the evidence to the contrary. And then, of course, it'll cost them a lot of money. So what we do here is we teach our members how to read the charts, how to read the markets, how to follow the trend, and how to, set stop losses, how to make money, how to get out, how to get in, all of that stuff. That's what we do. In fact, we just started a brand new Tuesday live webcast doing every Tuesday morning called Trends and Profits, where we just go through and we talk about all the latest news. We talk about latest trend alerts. We were talking about the S&P 500 and the Russell 2000 on our on this week's call, or on this week's webcast. We also talked about several other trading ideas as well, and trend alerts as well. So all that's for our members. They can go to followthemoney.com/webcast and watch that replay of this week's. And then every Tuesday live, we just do it right there on Zoom. So that's a really cool service we've recently launched that I think our members will really enjoy. And if you're not a member, you need to check it out. You can go to followthemoney.com/join. Just choose your plan, start a 7-day free trial. Check out our services. We got daily trading idea, daily emails that go out. We got nightly trading alerts with all the latest position uptrends and swing uptrends and long-term uptrends. And then of course we have a crypto portfolio, and we have portfolio strategies that we follow. Our Smart Score 11, for example, is up 25% year to date versus the S&P's up about 12%. So we're doubling the performance of the S&P 500 this year with our portfolio strategy, our top portfolio strategy. So anyway, just really cool stuff there at followthemoney.com. Now, also a couple of other things. Commodity prices have been hit. That's good news for inflation, but it's not so good news for commodity investors. If you look at the S&P Commodities Index, it's fallen about 11% so far this year, and crude oil is trading at its lowest levels since just before Russia's invasion of Ukraine. And that's even after Saudi Arabia announced over the weekend a decision to cut output, I think by another 1 million barrels or so of oil. That came earlier this week. Wheat, for example, also hasn't been this cheap since 2020. So wheat costs, which are major input costs for so many food products, have just fallen very sharply. And that's very good news for anybody who goes to the grocery store and eats, buys food. I mean, that's great news. But if you've been a trader of wheat, well, it's not working out so well in 2023. And why are commodity prices falling? Well, the 5% interest rates by the Fed might have something to do with it, huh? So that certainly could be slowing down consumption. Also, there's been a some sluggish activity in Chinese manufacturing, the world's biggest consumer of metals and a massive consumer of oil. They had a reopening after COVID, and there was a real robust. It slowed down a little bit, and that's caused some subdued industrial activity in China, certainly. Also here in the United States, manufacturing has slipped a little bit. Services remain very robust. Same thing in China. But, the energy, as I mentioned, the energy sector is the worst performing sector this year, ironically, because last year it was the best performing sector. So commodities have been falling. The dollar has been a little bit resurgent in recent weeks, largely due to the debt ceiling deal, still recession fears and things along this nature. And then also, there is a little bit of debate on what the Fed is going to do at its upcoming meeting, whether it's going to raise interest rates again or whether it's going to pause. We're of the opinion that the Fed is going to pause. And the latest jobs report that came out last week also seems to indicate that the Fed is likely to pause. So that's what we're watching right now. Also, for those of you who are long Apple stock like we are, you may have been very excited to see the release of Apple's very first major product since 2015 when they released the Apple Watch. And that was the Vision Pro headset. I went in depth about this particular product on our latest Trends and Profits webcast this week that I mentioned for members. I talked about why I think this is such a revolutionary product and also what it could mean. And I also talked about a few other interesting ways to trade or invest around this new Vision Pro headset, not just Apple. There's some other interesting ways that you could trade and invest around this. And if this does well, we could see some really interesting returns on some related companies. Apple made a lot of announcements, of course, at its latest developer conference this week. But the big announcement, of course, was that new Vision Pro headset. It's this VR headset that is, quite frankly, it's mind-blowing, where you put the headset on, it's a VR, and you're able to see everything around you. You're not like in the dark. Well, of course, you can immerse yourself and be in the dark, but you can be, somewhere else. But you can also keep it to where you can see people around you. And in addition to that, you're able to use your eyes to navigate through your apps looking through this headset. You're able to use your hands with no devices attached to them to make selections of what you're seeing. It's quite frankly, it looks like magic. They're going to be released early part of 2024, and the cost is going to be about $3,500. Pretty stout price tag, but makes me think back of whenever the iPhone was first released. Remember when the iPhone first came out, way back in 2008 or something like that, and people were saying, who's going to buy, an $800 or $1,000 phone? People thought, this is crazy. What's Apple smoking? What are they thinking? Of course, the iPhone turned out to be the best seller, selling phone of all time. And it remains the leader. Now, Apple is releasing another product. And what many people, I think, are failing to see on this Apple, headset, many of them are kind of getting lost in the weeds and saying, oh, look, it looks dumb. You put it on your head and people, it just looks dumb. And they say, who's going to wear it? Who's going to buy it for $3,500? I understand. I understand the hesitancy or the concern. But what I think is also unlikely is that, 10 years from now, you're still going to see people walking around with cell phones in their hands and just looking at their phones the way they do, because we're moving to a hands-free kind of place when it comes to all of this. That's the whole point. And Apple knows this. Facebook, or Meta knows this. Google knows that. I mean, the big tech understands the trends. They know what you want. They have more data on us than almost anybody. They know what people want. And so Apple's not going to release a product. And in fact, they've been delaying this product for they've been working on it for 7 years. They've delayed it several times because they knew the time wasn't right or the technology wasn't right or whatever. But they unveiled it this week, and they're planning on releasing it for people to buy at the beginning of next year. So it's going to be very interesting to see how all that plays out. The new 3D apps they're all going to be running on a new OS, Vision OS instead of iOS. So we'll be watching that story as it unfolds, but we are very bullish on the future of Apple and think they've made a good move here with this latest VR headset. I think more people are going to want it and desire it than maybe they're letting on right now, especially after people try it. Okay, all right. Well, I want to talk a little bit more about the markets, but I want to turn our attention to the crypto space. The SEC has just gone wild, suing Coinbase and Binance. I want to talk about that and provide you some updates on the other side of this break. Hold tight. Hey friends, it's Jerry Robinson here from Follow the Money Radio. You know, we just launched a very exciting live weekly webcast called Trends and Profits that I want you to be a part of. It is part of our membership. You have to be a member here at followthemoney.com to be able to enjoy this webcast. But what we do in this webcast is we provide you every week with valuable insights, trend alerts, actionable investing and trading ideas. And then you also have the opportunity to get your questions answered during our member Q&A segment. Each episode of the Trends and Profits webcast, which is every single week, is thoughtfully crafted to deliver 4 segments that will empower you to make smarter investment decisions. We begin with a news brief, helping you stay up to date with the latest market news that could impact your investment strategies. We analyze the current events and economic data and geopolitical trends to help you navigate this ever-changing market landscape. In segment 2, we move into trend alerts and help you stay ahead of the curve with our trend alerts. We share our expert analysis of market trends. We identify key opportunities and potential pitfalls, and we help you discover those emerging trends so you can unlock potential profits. And then in segment 3 of our new weekly webcast, we tackle actionable investing and trading ideas. So when you're ready to take action, this is the perfect segment for you. We present actionable ideas and strategies designed to help you capitalize on market trends, from stock picks to ETF trading strategies, crypto ideas. You'll receive practical guidance to help you achieve your financial goals. And then in our 4th segment, we spend time answering your questions, which matter to us greatly. We believe in the power of community and fostering a supportive learning environment. So during our member Q&A segment of our weekly live webcast, we address your specific queries. We provide insights and offer some general advice to help you overcome any hurdles you may face in your investing or trading journey. So our brand new Trends and Profits webcast for members only, I encourage you to check it out. You've got to be a member here. Of course, you got to go to followthemoney.com/join. Become a member today. Start your 7-day free trial. Check it out. If you want to be a better investor, a better trader, you want good ideas delivered to you in your inbox every single day, Follow the Money. That's where you want to go. Followthemoney.com/join. We're here for you. We want to help you in 2023. I'll see you on the other side. All right, friends, welcome back to the broadcast. Great to have you here. Followthemoney.com is our website. You can learn more about us right there online. So let's move into the crypto space. We talked a little bit about the stock market. We talked about what's been happening there. We got some bullish activity happening. But what about the crypto market? Crypto market has been tough. We had a really good, robust rally at the beginning of the year. Bitcoin and Ethereum, many of the leading coins went up really well. And over the last few months, they've been a little stagnant. They've kind of, just kind of fallen into some consolidation, which is totally normal. But there's been some news lately that's really been hampering the cryptocurrency space here in the United States and around the world. And that is coming out of the Securities and Exchange Commission, the SEC. Now, I want to preface this by saying that I am not an enemy of the SEC. I'm very grateful that the SEC exists. I mean, the SEC plays a vital role in keeping, and overseeing the capitalistic system here in the United States, specifically the stock market, and the capitalists who are creating products and services, and then wanting to go public, and oftentimes without some sort of protection. Go back to 1929. You see what happens when you don't have investor protections. So investor protections are important. I'm not against investor protections. I'm not against the SEC. I think the SEC is a little bit out of its lane here, though, quite frankly. And this is really what's going on. This is what I want to talk about. So we just had two major announcements by the SEC this week. First, they announced on Monday that they were going to sue Binance, which is the world's largest cryptocurrency exchange. And they are alleging in their lawsuit that Binance is operating an illegal trading platform in the U.S., and that they have misused or misappropriated, or maybe the right word is commingled, customer funds. And they have named both Binance and its founder, who goes by the name, by the initials CZ, as defendants. And of course, Binance is, very much against this suit. They have protested. They have said that they're going to fight this all the way. What's interesting is Binance is where, it's the largest cryptocurrency exchange in the world, but really by far. I mean, it wasn't too long ago that 2 out of every 3 crypto trades was being done on Binance. That's wild. I mean, I remember when Binance first got started, we were buying Bitcoin, way back in the day, not from Binance. Binance is, came along, it was one of the earlier ones, but it certainly wasn't around at the very beginning. So, we saw Binance rise. We saw it become very popular, and it's really dominated. So Binance has become a very massive cryptocurrency exchange. It's domiciled offshore. So how the SEC is going to go about, enforcing any kind of court action is going to be very interesting to see. But overall, Binance is fighting this. And what's also interesting is the SEC, in their court complaint, asked a federal judge to freeze Binance's assets and put them in receivership. That's a huge ask, and we don't expect that to happen. But that was a little bit surprising to me. You've already seen the SEC go after Bittrex. You've seen them go after Kraken. You've seen them go after, they issued a Wells notice to Coinbase not too long ago, which meant that they were intending on suing them. Well, that came on Tuesday of this week. So on Monday, the SEC announced they're suing Binance, the world's largest cryptocurrency exchange. And then on Tuesday, they announced that they are going to sue Coinbase, which is the largest crypto exchange in the United States. And now they're much smaller, by the way, than Binance. If you look at Coinbase, for example, they account for about half of the crypto spot trading volume in the U.S. But if you look at global volume, they make up less than 7%. So, Binance is a much larger company. And when you look at, by the way, Coinbase, you'll notice that in the 2 lawsuits, the SEC has not claimed that Coinbase is commingled funds or anything like this. They're simply saying in the lawsuit that Coinbase violated rules that require it to register as an exchange and to be overseen by the SEC. So we could get into all the details of what this is about, but I think the bigger takeaway for this is the fact that the United States has really dropped the ball when it comes to crypto regulation. There's nothing wrong with regulation. People like to complain about it. They like to talk about how they don't want any regulation, but it's not really the case that people really want that. I mean, in reality, regulation is helpful oftentimes. You want stop signs. Do you not want stoplights? I mean, that's called regulation. Do you not want pharmacies to be regulated and drug makers to be? I mean, everybody understands that regulation has its place. When it comes to cryptocurrency, regulation is needed because it brings investor confidence. It brings a level of confidence that investors can say, okay, we know what the rules are. It gives a level of confidence to the industry. The industry players, the crypto exchanges, they're like, okay, these are the rules. Okay. What the problem is that we haven't seen rules laid out by the United States at all. I mean, quite frankly, it's very, very opaque. There's very few transparent rules here. And we don't even know what a cryptocurrency is or a digital asset is based upon the SEC or the CFTC. Nobody seems to know even how to define it. Okay. This is not the way that other nations have tackled this. The way that the United States has handled the crypto regulation, if you want to call it that, is just absurd. I mean, it really is. It's completely absurd. If you look over, say, in Asia, you'll see several countries that have already dealt with this. They've already put this to bed, right? They're like, no, the genie's out of the bottle. Cryptocurrencies exist. Bitcoin's a real thing. People want it. They demand it. There's use cases for it. We get it. And so what we're going to do is we're going to tax it at this level. And we're going to say that these are the rules for exchanges and these are the rules. And, and they just laid it out. Okay. So in Asia, there's a lot more investor confidence and business confidence in crypto than there is here in the United States, which is supposed to be the leader, of the global economy. And this is a burgeoning new innovative technology that the United States cannot afford to simply, just shut down because they don't like it. That's not a smart way to go forward. Even the EU has already got ahead of the United States on this. It was a while back. It was back in April where EU lawmakers approved the world's first comprehensive framework for crypto regulation, known as MiCA, Markets and Crypto Act. The EU Parliament passed that overwhelmingly back in April. And what it does is it sets requirements on crypto platforms and token issuers and traders. It provides transparency. It provides disclosure requirements, supervision of transactions, and this is all fine. I mean, this is what you would expect. I mean, just like when you have stocks are regulated, people want to know there's some sort of regulation going on. That with the money, they put money in the bank. They want to know there's regulation around the bank. There's nothing wrong with this. You want to have regulation. It brings confidence, investor confidence, and business confidence. The problem is that the United States, as I mentioned, can't even define what a digital asset is. They don't even know what a cryptocurrency is. They don't even define it. They don't even have a plan. They don't even know who's running it. They don't even know who's supposed to be regulating it. The CFTC is pointing at the SEC. The SEC is pointing at the CFTC. I mean, nobody really knows. And this makes it very treacherous for the industry. Makes it very treacherous for people who are, trying to run a crypto business in the United States. Many of them, including the head of Coinbase, Brian Armstrong, has said, look, we're just thinking about moving overseas. This is absurd. We'll move to Europe. They're already trying to get, they're already applying, I think, for an Irish, no, that's Ripple. Ripple is applying for, with the Irish central bank for a license. But what the unintended consequences of this are, whether they're unintended or not, I don't know. But all of this confusion and lack of transparency on the part of regulators here in the United States to handle the crypto industry and as it's rising is to run them off. And China's happy to have that. Europe's happy to have that. They're welcoming these innovative companies, in many ways. And so it's sad that the United States is playing the game like this, and they're so far behind when it comes to simple regulation of these assets. And the other day, the SEC chair, Gary Gensler, who many people thought was going to be pro-crypto because he had taught MIT courses on blockchain. He had spoken friendly of Bitcoin and Ethereum. So many people thought, well, hey, when he was appointed at the SEC, they thought this is good news, But it turned out that he has been, quite frankly, the very opposite of what many people hope for. He has become a real nightmare for the crypto industry here in the United States as it tries to grow and blossom here in the United States. Well, anyway, the other day during an interview with CNBC in the wake of all of these lawsuits that the SEC has filed, the SEC chief, Gary Gensler, let it slip as to what may be behind all of this. We have a little audio clip here from his interview on CNBC that is pretty revealing. Roll the tape.
Look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. We already have digital investments. It's whether it's the big tech companies, the automobile companies, you name it. It's all digital right now, the investing world.
Okay, so there you go. I mean, making it very clear that we don't, this is the head of the SEC. We don't need digital currencies. We don't need any more, he says. We don't need any more of these things. We've already got the dollar, he says. The dollar's digital, because of the FedNow system they have, plus this coming CBDC. Oh, the euro, he says, is a digital asset. We don't need any more digital assets, he said. Well, the problem with these digital assets, like the dollar, is the fact that you can just inflate them away into oblivion, right? What people are wanting through crypto is something that provides value innovation, innovative technology that is, that allows you to send money anywhere for low cost without that third party middleman taking a big cut, okay? And a finite supply. How about that? How about that for a strange idea? A finite supply? The United States dollar has no such finite supply. It's infinite supply, right? So the point is that Gary Gensler in this interview on CNBC let it slip that we don't need any more digital currencies because we already have digital currencies like the dollar, right? So this is, I believe this is partially what it's about. When you look around and you see the paranoia of the United States towards cryptocurrencies versus, say, other countries that have already put this to bed, they've dealt with it, they got tax laws that make sense, they make it simple so you to understand, it's very clear and transparent. The difference is none of these other countries are stewarding the world's reserve currency, right? The United States is. The United States has the most to lose when it comes to competing currencies. It doesn't want any competing currencies with its currency, right? So it doesn't like the fact that Bitcoin and Ethereum and many of these other digital currencies, digital assets, have become so popular, and they're trying to figure out what to do with it. And they've still 10 years on, 15 years on, they still don't know what to do. They still don't know how to handle it. Other countries are way ahead of the game. And this is one more example of the United States, an empire in decline, trying to cling to its crown and shooting itself in the foot at the same time, allowing other countries to adopt this innovation and pursue it, while the United States tries to hold on to the past and is confused and is conflicted and doesn't quite have any kind of transparent rules for, the crypto industry to hold on to. So it's forcing them out of the country. It's really a bad deal. Now, as you well know, we are long cryptocurrency, which should be obvious from my commentary. We've been long cryptocurrency, for over a decade. We've been talking about cryptocurrency on this podcast for over a decade. We told you a long time ago, and we've been saying it for a long time, that there would be a war on cryptocurrency by the United States for all the reasons I just laid out. So none of this is new. We're not surprised that Binance got sued by the SEC. They got sued by the CFTC just back in March. They're underneath DOJ investigation over whether they're handling the detection of money laundering properly. We're not surprised by the fact that the SEC is suing Coinbase. They've been fighting with Coinbase now for a long time. They sent them a Wells notice a couple months ago. We knew about all this. So it's not a surprise to see that the SEC is gone wild and is suing everybody instead of just issuing laws and regulations and making things clear. That's what they need to do. But we remain long on cryptocurrency despite this. I think it's a buying opportunity, quite frankly. And we continue to dollar cost average right into our favorite cryptos, Bitcoin, obviously at the very top, and our favorite of all. We also like Ethereum. And then we like a handful of others. And we have our whole portfolio online for our members. But anyway, latest update there on the SEC gone wild with cryptocurrency. It's a sad, sad state. Let's hope that some sanity reigns. And don't forget, the SEC is not the final arbiter here. The head of the SEC can change, which it does often. I mean, even Jay Clayton, who was the chief at the SEC now, he's working for a company that got bought out by Coinbase. He's advocating for the crypto industry. But he was just this chief of the SEC before Gary Gensler. So my point is that whoever the head of the SEC is, that will determine the future of what they're going to do with the crypto space. And it's not just them. The president is the one who has executive power over that branch, over that agency. So it all depends on a myriad of things. But we've often said and long said that the courts are the ones who are probably going to ultimately decide this, or the Congress. Quite frankly, the Congress needs to pass laws that make it clear. So the SEC is just kind of operating in this vacuous state where the Congress has not really passed anything meaningful to help the crypto industry, because the Congress is too busy infighting over the dumbest stuff you've ever heard, trying to win and score points on the culture wars instead of drilling down and doing the people's business. So you know how it is. We could go on and on about that for a long time. But anyway, long story short, we are long cryptocurrency. We think that the current chaos is just good news for those who have a long-term perspective. We see stocks, as we mentioned in segment one, also breaking out. We see a new bull market dawning here. So overall, we continue to invest. We continue to invest in stocks. We continue to invest in real estate. We continue to invest in cryptocurrencies. And if you want to join us, I encourage you to go to followthemoney.com and at least sign up for our free newsletter we put out, our daily dose, which we put out every day for our free members. Just gives you a little bit of tidbit of what's going on in the news with a little bit of commentary. But if you want, everything that we provide, become a member. Followthemoney.com/join. We'd love to have you join our global investing and trading community. Come be a part of our community and learn how to trade and invest for profit in these very tumultuous times. Friends, welcome back to the final moments here of today's broadcast. I sure hope you've enjoyed this broadcast today. We've talked about quite a bit. And as always, I like to leave you with a final word, this time by the legendary stock investor Warren Buffett, when he said, "The stock market is a device for transferring money from the inpatient to the patient." Those are wise words indeed, reminding us of the importance of a long-term perspective when it comes to investing in stocks and cryptocurrencies. And as we conclude this episode of Follow the Money Weekly, we hope you've gained some valuable insights into tracking the pulse of stocks and cryptocurrencies. The world of finance can be exhilarating, challenging, and full of opportunities. It's a journey where knowledge, discipline, and perseverance pave the way for financial success. So I encourage you to stay informed, stay curious, stay focused on your goals. And as always, we sure do appreciate your support and dedication to following the money with us. Keep your eyes on the horizon, embrace the ever-changing market landscape, and seize the possibilities that lie ahead. Remember that when it comes to your financial well-being, knowledge is your greatest asset. And never forget, when you want the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
The information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always